everyone, welcome back to Trading with Susie, where we turn trading stress into trading success. Today we're tackling a topic that's as crucial as finding that last slice of pizza at a party: risk management and identifying stop losses. But we're not talking about those hard stops that you see plastered all over your charts. Nope, we're diving into the art of mental stop losses, because who needs a hard stop when you have a brain? All right, let's be real. Trading without a plan is like playing poker with your life savings while blindfolded. You wouldn't do that, right? So let's get smart and talk about mental stops. Elegant, sophisticated way to protect your trades without hard stop. It's like having an invisibility cloak that only you can see. Tip number 1, the power of mental stops. Mental stops are like your secret trading weapon. Instead of setting an actual stop order on your chart, you decide on a point at which you'll exit if things go south. Think of it like deciding on a no-go zone before you start a road trip. You don't need GPS to tell you when you're lost. You already planned your turnaround point. Let's use an example from our trades today. KTTA was a pre-market runner today, and it was on a trend with plenty of room to a target. In order to manage risk, you always want to buy as close to a support level as possible. In this case, the nearest support level was the 50 EMA. So that was your plan. Wait for a possible bounce off the 50 EMA and use the 50 as my stop loss. If the trade doesn't work out and closes below the 50 EMA, I'll exit at a loss of only a few pennies. In this case, we got the bounce up off the 50 EMA at 6:37 my time, and the lower reversal confirmation confirmed the trade entry at around $6.10. So we stay with the trade to our smart target of $6.75. You mentally set your stop at just below the 50 EMA. So if price closes below the 50 EMA, you'll exit the trade without a second thought. It's like knowing when to call a cab before you end up in a sticky situation. Preparation is key. Tip number 2, determine your stop loss before entering the trade. Here's where the magic happens. Before you even hit that buy button, you should already know where your mental stop loss is. This way, you're not reacting to the market. You're proactively managing your risk. It's like knowing the rules of a game before you play. You wouldn't start a game of charades without knowing the rules, right? Say you're about to buy your second trade for the day on stock KTTA at about $6.82, with a target of the previous high of $7.50. Before you make the trade, you analyze the chart and decide if price falls below $6.75, which is this previous target. Remember, our previous target needs to become support, right? So if it fails its support, that's going to be where you exit, which is $6.77. So if the stock starts to head south, you'll be ready to pull the trigger and get out. It's like having a safety net without actually carrying one around. It's practical and smart. Tip number 3, use technical analysis to set your mental stop losses. Technical analysis is your friend when it comes to setting mental stop losses. Look for support and resistance levels, trend lines, and other indicators to guide your stop placement. It's like having a map when you're exploring uncharted territory. You wouldn't go hiking without a map, right? It's 7:45 a.m. September 26, 2024, and FFIE popped on the scanner. Price just crossed the 200 EMA on the 1-minute chart. You notice the trend and volume is building, so you use that 200 EMA as your stop loss line and enter the trade at around $3 and use your smart target of $3.44 as your target. As long as price holds your stop loss of the 200 EMA, which is $2.97, you'll stay in the trade to your target. You know your stop loss, which is this line. If price closes below it, you exit and live to trade again. Otherwise, you stay with the trade to your target. Trading like this is like knowing when to turn around before you end up lost in the woods. Navigate smartly. Tip number 4, don't let emotions drive your decisions. Trading can be an emotional roller coaster, but letting emotions dictate your stop loss decisions is a surefire way to get into trouble. Remember, your mental stop loss is a predetermined plan, so stick to it like glue. It's like sticking to your diet plan at a buffet. Tempting, but you've got to stay disciplined. You're in a trade with stock DUO. September 26, 2024. You entered the trade at $1.09 right here, which is right at this support level. You knew your target was this next smart line of $1.34, but you didn't stick to your plan there and you didn't get out because you kind of were hoping it would go higher. Now it's not going as planned. Your mental stop was this dynamic trailing line right here, but price broke below it at $1.21. It's tempting to hold on, hoping for a turnaround, but remember your plan. Stick to your stop at $1.21, which is this line, and exit the trade. It's like resisting that extra slice of cake. Sometimes you just gotta say no. Tip number 5. Be prepared for market volatility. Market volatility can be a wild ride, but having a mental stop helps you stay grounded. It's like having a seatbelt in a roller coaster, essential for keeping you safe when things get bumpy. It's like bracing yourself for turbulence on a flight. Expect the bumps, but stay secure. Tip number 7. Practice makes perfect. The more you practice setting and sticking to mental stop losses, the better you'll become at managing risk. It's like learning to ride a bike. Wobbly at first, but eventually you'll be cruising with confidence. It's September 12th, 2024, and you're trading stock SMMT, and you use mental stops for the very first time. At 7:50 a.m., price is surging through that $17.95 previous resistance level, and your lower confirmation agrees on the continuation signal. It's time to take a trade at $18.02 with a target of $20. You set your mental stop at that $17.95 support line. If price closes just below that, you will exit the trade with minimal loss and learn from the experience. With practice, your stop loss strategy will become second nature. It's like mastering a new dance move. Awkward at first, but smooth once you get it. All right, traders, now you're armed with the knowledge of mental stop losses and how to use them effectively. If you enjoyed this risk management roller coaster and found these tips helpful, smash that like button and subscribe for more trading insights, and hit the bell so that you'll never miss a video. Got questions or want to see more on managing risks? Drop a comment below. I'm always here to help, and if you'd like to join my mentoring program, go to momentumstocktraders.com for free web classes and a chance to work with me and trade with me on a one-on-one basis every single day. Remember, in the world of trading, managing risk is like having a trusty sidekick, keeping you safe and sound while you chase those profits. Keep those mental stops sharp, your trades on point, and may your trading journey be filled with success. Until next time, happy trading and see you in the next video.